Hi, I'm David Buckland. The significant weakness in China's manufacturing and infrastructure sectors are playing havoc amongst world stock markets. In the 6 months to December 2015, the Australian market was down 0.35% and world markets in Australian dollars were up just over 1%. I was particularly pleased with Montgomery's performances. The Montgomery private fund delivered our investors a return in that 6-month period of just under 14% after expenses. The Montgomery fund delivered our investors a return of just under 13% after expenses. And most pleasing for me was the kick-off of Montaka, our global long-short fund. The Montaka Global Fund, which is designed for wholesale investors, in the 6 months to December, delivered our investors a return of just over 15.6% after expenses. And the Montaka Global Access Fund, which feeds into Montaka, which kicked off on the 1st of November, in that 2-month period to December 31, delivered our investors a return of only 0.86%. When I say only, what I'm really trying to drive home is that world markets in Australian dollars over that 2-month period were down well over 4%. So in simple terms, it outperformed world markets by 5 percentage points over that short period of 2 months. So what I'm trying to say to you is that the Montaka Global funds, both the Global Fund and the Access Fund, are working well in the turmoil of which markets are in at present. 2016, in the first 7 business days, has kicked off with a tough period. We've seen the Chinese market down about 15 percentage points. We've seen the Aussie market down 7 percentage points, the US market down 6 percentage points, and most Western European markets down about 8 percentage points. The commodities complex, particularly oil, continues to be bashed up. And we're now seeing BHP and Origin Energy at 11-year lows, and Santos, believe it or not, now at a 20-year low. Fortunately for Montgomery, we've not only avoided this commodities complex in a very significant way, but for Montaka, we've also shorted a number of stocks in the space. And that's one of the reasons that product has been extremely defensive in this rather tumultuous time. I don't know how 2016 is going to play out, but I do know that interest rates are going to stay lower for longer. We are going to have pressures from deflation imported from the China devaluations, the Chinese yuan devaluations. And I know at Montgomery we're going to continue to stick to very, very high quality industrial stocks with good prospects. In our Australian products, we still have over 20% cash and we're awaiting opportunities of those high quality stocks. And in Montaka particularly, we're going to continue, I believe, to do well specifically on the short side, and particularly some of those stocks that are vulnerable to that commodities complex getting worse rather than better. I wish you a very happy and prosperous 2016. I don't think it's going to be easy, but I do think interest rates are going to stay very low for a longer period of time than many anticipate. Thank you.